Live from the Business RadioX studio inside Renaissance Bank, the bank that specializes in understanding you. It's time for North Fulton Business Radio.
And hello again, everyone. Welcome to another edition of North Fulton Business Radio. I'm John Ray, and we are broadcasting live from the Renaissance Bank studio in Alpharetta. And yes, we are inside of Renaissance Bank on Windward Parkway in Alpharetta. And it's a terrific location with terrific people. And that's true for really all of Renaissance locations. Terrific bunch of folks. And we've been delighted to get to know them increasingly over the last few years. And my suggestion to you folks, if you're tired of the big bank experience, but yet you want a bank that's big enough to handle pretty much any need that you can throw at them, go to renaissancebank.com and find their local office. They've got some 200 around the South ready to serve you, and give them a call. And I think what you'll find is what I've found in this office that I'm sitting, terrific people here that are helpful, customer service oriented, and I think you'll be glad you got in touch. So give them a try. Renaissance Bank, understanding you, member FDIC. Now I want to welcome Don Simon, and Don is with Simon Financial Company. Don, welcome.
Hello. How are you, John?
Yeah, great. Great to have you here.
Thank you.
Yeah. So let's talk a little bit about you and Simon Financial Company. How are you helping folks out there?
Okay. Well, I've been doing this for over 30 years, and I've worked with over 350 companies of all types, everything from super blue collar to auto body shops to high-tech management consulting, professional practices. So it's been very interesting because I've had a wide variety. My primary focus is two things. It's number one, what I call talent retention plans for key executives. Mm-hmm. And number two, business succession planning, to have a great plan at the end of the day of what's going to happen to the business in the event of death, disability, or retirement. But today we're going to focus on the talent retention plan.
A big problem for a lot of folks. Let's talk about a talent retention plan. What is that? Okay.
Well, first of all, I want to tell you a little story, and this is how I learned about this kind of a plan. It's actually through my father. Mm-hmm. My father went to work on the loading dock of a warehouse in Chicago when he was 15 years old. His father passed away, and he had to drop out of high school to support his mother and three sisters. Shortly after that, he was at World War II, and as soon as he got out of the military, when he was a tank commander for General Patton in Germany, he went back to the loading dock of the warehouse. He was in the retail business, department stores, and he worked his way up. And for many years at the end, he was senior vice president of operations of CVS. The company offered a supplemental executive retirement plan in addition to the regular retirement plan that was substantial, and it kept him with the company. He had plenty of offers from other companies because he knew how to make a lot of money for the company. But when the competitor said, we'll give you 30, 40% more pay, he said, fine, but you have to match this supplemental executive retirement plan. And they said, no problem. He said, fine, give it to me in writing after you talk to your attorneys and accountants. And every time they came back and said, whoa, you better stay where you are. We cannot match this offer. So it kept him with the company until he retired at age 63. And then he lived for 25 years and had a substantial supplemental retirement plan. And then when he passed, my mother lived another 7 years and had a survivor benefit under it. So it helped him, but it helped the company because it kept him working for the company and making a lot of money.
Okay, so that's a great story, but let's kind of define what that is then, talent retention plan. So,
okay.
Yeah.
Well, first of all, we need to make one basic differentiation. For big companies like CVS, they use deferred compensation, supplemental executive retirement plans that are specifically subject to what's called IRS Section 409A of the Revenue Code. It's a lot of rules and regulations. The basic thing is it makes it a general asset of the company. If you're working for CVS, you're not going to worry about losing that money when you go to sleep at night. But if you're working for a smaller company and they get sued or have creditors come after them for different reasons, that money is a general asset. So the plans we use are different because they avoid all those rules that the big companies have to follow. So that if you're an executive working for me, you don't have to worry about where the money's going to be. It'll be there when it's put in a separate fund, and it's not subject to creditors.
Okay, so let's talk about how this works. I mean, does the employee contribute to this? Does the company contribute to this, or both?
Okay, I want to just take one step before we get there, and that is the single most important thing I've learned is you only want to offer this to truly key executives of the company. A truly key executive means that that company thinks if that employee dies or leaves, they're going to suffer a severe financial loss. So this is not for somebody that is Joe Vice President unless they're truly really key to the company's operations and profitability. So it may, even for companies with hundreds of employees, there only may be one or two people that fall into that category.
Okay, so this is not like a retirement plan, which retirement plans have to be offered to all the employees, right?
Right. So the key thing is that it's selective to the company, it's tax deductible, and it's not subject to all the rules and regulations. So it's simple to administer.
And so let's get back to who funds this. Does the company fund this? Does the employee fund it, or both?
Right. So let's use an example. Let's say that you're working for me, and you've been with me for at least a few years. You're really good at what you do, whether you're in sales, executive, and you're helping me make a lot of money. I may come to you and say, look, we're going to offer you a supplemental executive retirement plan. Typically, it's based on certain performance objectives, and we'll put that money aside for you and invest it fairly conservatively. So when you're at retirement, the money comes to you. So in other words, there's what's called a vesting schedule, but you don't vest typically until retirement age. So if you can leave anytime you want, but if you leave one day early, you don't get a penny. The company recoups that money.
Okay. Folks, we're here with Donald Simon. Don is the owner of Simon Financial Group. So, there are a lot of supplemental plans for executives out there, Don. What is it that makes this one different?
Right.
Maybe it's some of what we've already discussed.
Well, that's a good question. One thing a number of companies have done is they've offered the executive stock in the company. And again, if you're working for a company like CVS, that's a publicly traded company, so you could sell that stock whenever you want. When you're working for a smaller company that's a privately owned company, it typically doesn't pay a dividend. It's not a marketable security. So it's nice when the company says, we'll give you stock in the company. But when you're a minority stockholder in the company, it doesn't mean a whole lot.
Right.
So this is different. So for example, if I say, okay, if you stay with me till retirement, I'll put away an additional, it could be $10,000 a year, but let's say $25,000 or $50,000 a year. And then it builds up investment earnings on top of the amount that we put in. And if you stay till retirement, when at the vesting age, that money is yours.
Right. So, I want to ask this again because I want to be clear on this. Who funds this?
The company pays for it.
So the company pays all of it?
100%.
Okay, awesome. So for the executive, for that key employee, that's a pretty good deal for them, right?
Very good.
Yeah. And just to reiterate, because I was really interested in this point, if an employee leaves prior to retirement or some predetermined date,
right,
then they lose that. They don't get that benefit.
they don't get a penny.
And so that comes back to the company's coffers.
Right. And that's what makes it different, because
Yeah.
most compensation plans are current compensation. Either that or, again, you get stock in the company, which what are you going to do with it?
Yeah, sure. So are these plans regulated by the Department of Labor or some other entity?
That's a great question. The plans that I talked about earlier, like my father was covered by under the big company, they are subject to the Department of Labor and also the SEC. So these plans are not subject to all that, and they don't have the same. They don't have reporting requirements to the government.
Mm.
But the company does need to adopt a basic document saying they're putting the plan in place.
Mm-hmm.
But that's just internal. It does not submit it anywhere.
Okay, and they don't have to have some government mandated annual audit or something like that.
Right, and that's a huge part. Those other plans a lot of companies use have that's IRS Section 409A is 400 pages of rules and regulations. We avoid all that completely. It's very simple.
Mm. So how does a I mean, this sounds like particularly in these times when talent retention is such a big issue for so many companies. How does a company go about deciding which employees should be eligible for this plan?
The real answer is there's no set rule, but some company owners have said to me, all my employees are key employees. They're all important to the operation. But I ask them to think about it. I don't even want a quick answer to it, but I want them to think, if a certain employee left, would it probably cause a severe financial disruption to the company? If not, then they're probably not a key employee. So a lot of small companies where it's run by the owner, they may have a manager, but that's not really it's a key executive that's helping to produce a lot of profit for the company.
So I'm sure there's some owners out there that they're thinking this way. Can I, as the owner, put myself in such a plan?
The answer is no.
I knew you were going to say that, Don. You just disappointed a bunch of business owners out there.
There's ways that companies can do it, but it's a different approach.
Gotcha. Okay. So, how do these contributions, how can they be tied to performance?
Well, it's really up to the company what criteria they want to use, but the one thing that I feel is really important is that it's got to be clear and it's got to be measurable.
Mm-hmm.
So if they just say otherwise, if it's not, then you're opening up yourself for dispute or problems in the future. Mm-hmm. And number two, you want it to be effective to really be sure it ties into what you really want from that executive to make the company keep growing more profitable.
And how am I able to change the plan? I mean, companies change, objectives change, growth goals change. How if I'm the business owner, how am I able to make changes in the plan?
They can modify the plan if they put in the initial agreement they give to the executive that they can review it every year or several years.
Which is sounds like something you'd probably recommend, right?
Yeah. Well, the flexibility is important. That's one of the advantages of these plans.
Right. Folks, we're chatting with Don Simon. Don is the owner of Simon Financial Company. So let's talk through a couple scenarios here. So, you said if the employee leaves on their own volition,
right,
then they lose that money.
Correct. The company just keeps equal to the contributions the company puts in. If there's excess above that, the executive gets it, but every penny that the company puts in, they get to keep.
Got it. So any investment earnings or anything like that, the executive leaving would get, or key employee would get.
Right.
Okay. What about if that employee is terminated, maybe terminated for cause?
Well, that would be a different situation. So again, if the employee is terminated for cause before the vesting date, they're not going to get a penny.
Right. Gotcha. Okay. So I guess it's interesting because I really wasn't familiar with this concept before our conversation about it. Why is it that a lot of companies don't use this plan?
That's a great question. And the real answer is I don't have a 100% clear answer on this, but some companies do. A lot of them are not aware of how to do this. They think in terms of the bigger plan, subject to all the rules and regulations. So there's some companies that do it, but not nearly enough know how to do this. But number two, how to tie it to performance objectives so they can really make it meaningful all the way around.
Mm-hmm. Mm-hmm. So let's talk a little bit about, I guess, the types of companies that you see implementing these plans. That maybe an example of someone that's done it very successfully, that's really helped their business and the growth of their business.
Okay. All right. And there's also examples of companies that haven't done it for key employees, and things have happened to the company that were not good because they didn't do anything like that, where the executive just up and left.
Mm-hmm.
The other thing that companies should do, which is not exactly part of this, is have agreements with the employees that the non-compete agreements, the non-disclosure agreements, and all that stuff. And it makes no sense to have this kind of plan unless they have all that kind of stuff in place too.
Right, right. What is the taxability of the earnings in this plan? And are there tax implications for the company, for the employee, both? Talk about that.
Okay, that's a good question. It's tax deductible to the company. So if I'm putting in $50,000 a year for you, that's actually additional compensation to you. Mm-hmm. So what the company does is they'll typically bonus the amount equal to the tax liability for you, so you don't have that additional tax burden.
Okay.
And you actually own the contract and all the assets in it, but it has what's called a restrictive endorsement, which simply says if you leave before whatever age it is, 62, 65, the company recoups the money they put into the plant.
Gotcha. Yeah, well, I see the psychological benefit of that, because the employee really is taking ownership of that, conditional to staying on with the company. They're taking ownership of those assets immediately. So, right?
Right, except there's the endorsement and the restrictive endorsement that if they leave early, they're leaving that behind. But it also produces, and a lot of times it's a permanent insurance plan that produces an additional death benefit on top of that the family would get in the event the executive passes away with the company.
Right. So I can hear folks now thinking, Don, this sounds great, but this must be an expensive thing to do. I mean, if I've got a smaller business, small, medium-sized business, am I going to be able to afford a plan like this?
That's a great question. And the way I would answer it is companies can put, I would say realistically, as little as $10,000 a year into the plan. And then it could go up from there, just depending upon how much more they think it is that they want to put in for the executive to really make it attractive for them to stay.
Right. And the setup cost and the maintenance cost, what does that look like?
There is no setup or maintenance cost.
Okay.
So that's one of the best parts about the plant.
You got my attention. I love it. Don Simon is with us, folks, bringing good words about talent retention plans. And he does this work at Simon Financial Company. So really, I could be a fairly small company.
Right.
And that's where you really get into the importance of key employees, right? And taking care of key employees.
Yeah. The one thing I've learned over working with business owners for over 30 years, most companies greatly underestimate the value of the truly key employees.
Yeah. Yeah, and some of them are doing that to their dismay right now, right? Particularly right now with the talent shortage that we're seeing for a lot of companies.
Yeah. The next thing we're going to see is, because things are starting to open up more post-pandemic, a lot of executives that have stayed with companies, they may be leaving depending upon how well they feel like they were treated during the period of COVID. So, but going into the future, there's no question that this is going to be a continuing challenge for companies, especially in a global economy. So, truly talented top key people deserve to, at least for a company to consider something like this.
Yeah, well, and I think you said something there, Don, that I think is really important. Is most companies undervalue and underestimate the real value of what their the contribution of their key employees.
That's true.
Yeah. Okay. Don Simon, folks, with Simon Financial Group. Donald, this has been great, and I think there's got to be a lot of folks out there that want to be in touch. But I would love it, before we get to your contact information and how they could do that. Do you have a success story of someone that you've worked with? You don't have to mention names, of course, because you're in the confidentiality business. But it would be great if you could share maybe a success story.
Okay. Well, I mean, the biggest one is the one with my father, and that's the one that got it started. But there's been a number of them where the executives with companies have been offered jobs at an increased pay, a 30% increase in pay, 40%. But when they said to the competitor, do you offer a supplemental retirement plan like this? And they almost always say no. And most of the time, that's the end of the conversation. They just stay with the company.
Well, that's what we need to know, right? Don Simon, Simon Financial Group. Don, this has been great. We really appreciate you coming by. And but again, I would suspect there would be folks that want to be in touch and learn more about talent retention plans. Tell them how they can be in touch with you.
Okay. First, I want to thank you for the opportunity to be here.
Sure.
And all you do for the business community.
Thank you.
So it's Simon, SIMON, Financial Company spelled out, .com. My phone number, 770-863-0890. And my email is D, like Don, Simon, SIMON, at simonfinancialcompany.com. And you could just get in touch with me and we can have a complimentary consultation.
Great words from Don Simon, Simon Financial Group. Don, thanks again for coming on the show.
Thank you, John.
Thank you. Folks, just a quick reminder that if you've got administrative tasks in your business that are weighing you down, if you've got maybe bookkeeping is keeping you up all night, that's a bad use of your time as a owner. My suggestion for you is to go out and pick up the phone and call Essie Escobedo over at Office Angels, 770-442-9246. Here's what Essie will do is she'll listen to your problem, and she'll pick an angel or two from her heavenly team who will fly in, get the job cleaned up and done, and fly out. They do this on a virtual basis, and they do it on an ongoing or as-needed basis. She's got a terrific team. I know this firsthand because I work with her and for my business, and she's done terrific for me. So be in touch. Give her a call, 770-442-9246, or go to officeangels.us for more information. And as we wrap up the show here, folks, just a quick reminder that you can find this show on all the major podcast apps. North Fulton Business Radio is the search term, and we would love it if you would go find the show, subscribe if you're not already a subscriber, and give us a 5-star review. Now, that's not about me. It's not about Business RadioX. It's about our great guests who, like Don, who have products or services the rest of the world need to hear about and know about, and we want them to be found. And you supporting the show in that way will help them be found. So if you could do that for us, I'd greatly appreciate it. So for my guest, Don Simon with Simon Financial Company, I'm John Ray. Join us next time here on North Fulton Business Radio.